Hope everybody's doing well, YouTube. Today we're going to be doing a video on Amzn, some technical analysis. I've been wanting to do another trading video for a while. I have the time right now, and I definitely want to talk about how well Amzn has been doing, and since when I've been thinking about it for sure. Be sure to check my Patreon out, and I did just release my YouTube membership. If you have Android device, you can check the join button on my channel page. Pay for the membership to receive early and exclusive access to my overall videos. You will receive early access to my videos and other perks for the membership, like chats, different type of comments, emojis, and badges. So let's get to this video. Check the Patreon membership. It's going to be in the link in the description as well, for exclusive access to my videos of everything I do, reviews, music, and of course I will talk about some more videos like this as well, trading. This is going to be an overall video on Amzn. I'm going to definitely talk about my favorite overall moving averages, the 10 MA and the 50 MA. Shout out to Trader Brian Jones. Check him out on Twitter. He's the one that's definitely most known for this type of moving average setup. Check him out. And as well, I'm going to be using some Elliott wave from Options Flies. I've done some of myself, and his reference is great and free. Overall on Twitter, check him out. I'm going to talk about this right now. Amazing, specifically this candle right here. The weekly candle. I love to look at the weekly for a more longer term outlook, because I don't want to fade the overall trend when it comes to how I'm trading. So my main focuses are going to be the weekly chart and the 30-minute overall chart as well, with the 50 MA and the 10 MA. You can use the EMAs as well. Actually, the EMA is known to be better than the simple moving average because it factors in the most recent price action primarily compared to the previous price actions from the candles. So in this case, the most recent days from the 10th MA, which factors in 10 days, and of course the 51 as well. But I'm using the regular MA for now for this video. Not going to change it, but definitely put the EMA. I would choose that one for sure. So now let's talk about Amzn, specifically this candle from October 27th. If you look at the volume bar, going to do some volume price analysis. There's a great book on that, VPA. Look it up. This volume bar, big green volume bar that you haven't seen for a while, right here with this hammer candle, that's what you would call an anomaly, because if you notice, the low is 118.35. You can see right here the lows at the L. Turns into a hammer candle with a big green volume bar. So instead of going further down after 118, it actually goes further up into the week. Closes as a weekly hammer candle in green and a big green volume bar. You see this and automatically you don't think about trying to short anymore for the next week. Why? Let's look at another previous thing. Whenever a candle closes, especially on a long-term chart like the weekly, over the 50 MA, which in this case is the green one, the green line, like it did here, this is not the moment for you to try to short. Don't try to fade. This means long-term, it's managing to close over it, and this is changing and trend into a bull signal. This is a bullish signal right here. And what do you know? Right after it closes like that, it keeps going higher and higher and higher and higher. Then you have a cross, which just further confirms what you thought about once it closed over here before the cross to be over the 50 MA, closing at 110 right here. This weekly candle I'm talking about is from May 12th. So again, whenever the candle closes above the 50 MA on the chart, that's a bull signal, especially in the weekly chart. And that's what happens right here. Then it just keeps going over the 50 MA, and now you have the cross So all this acts as support, and you see the trend change from being short right here to long. That is your signal. Furthermore, whenever you get the pullback, if the whole cross is still active and it's not below the 50 MA, this is still bullish. So what happens? When you get a pullback, you want to actually notice when is it getting closer again to the 50 MA. And you see the closest it got here was at 118. So what happens? This is where you want to actually try to get for another long entry, because it's going back to the support of the 50 MA after breaking out. It closes as a weekly candle that is a hammer. So you see a small candle and a big volume bar. So that's an anomaly, because if this wanted to be further down red, you would have wanted to see a big red candle and a big red volume bar, as it did go lower than the previous ones. But instead, this 118 just went back into bouncing and it formed a hammer candle. So since it's not a lower full big red candle with a big red volume bar, this is not the time to short. Plus you're above the MA again, once again at support of the 50 MA. So all of this, the fact that it closed as a hammer candle green, and the fact that it closed as a big green volume bar, that's a bullish anomaly. In volume price analysis, you want for the trend to continue from what's been happening, you want the volume bars to confirm the price action. But in this case, it was going lower since the 143, 145. It went all the way down to 118. So people are going to think, should I short here? Keep shorting since it's still going down. No. Why? Because you're closer to the 50 MA support and you just notice an anomaly. That's probably going to revert the price to the other side, to the upside. Why? Because the candle is a small candle, hammer candle, and a big green volume bar. So that means the further going down from 118 is very unlikely. It's probably going to revert. And that's exactly what happens. Boom. Big 8%, 8.50% weak. And it goes higher, and then it goes higher and higher and higher. So we went from 118 to 147. And I've been looking at this since the 130s, and then I was still long at the 118s. And my target overall is 165. I'm still looking for that 160s. So I'm going to keep talking about Amzn until we get to that 165 target. Why I'm interested in it, because I'm still holding it. And definitely, I think this is a good swing trade. This is just me overall reviewing what I'm doing with my portfolio. This is a review for myself about my portfolio. This is not what you should do. You're just watching me review what I'm doing for myself. I'm not trying to give you anything to do you. This is what I do and what I look for myself. Once again, you can enjoy it and watch it and try to see how you choose to do whatever you want to do on your own. But this is what I'm doing, is just reviewing my own trading experience. So after that, what do I use for me to trade more intraday is a 30-minute. I love to see anytime the 30-minute closes above the 50 MA, we get the cross. That is for me to go to the upside. If it does the opposite, I look for downside, but knowing that the weekly is to the upside, the trend like we looked at over here, I'm not going to be looking for anything downward that is of a lot of time, because I know that the overall trend in the weekly chart is bullish because of that cross upward. So I'll be looking for any upward setup on the 30-minute while I hold. Overall, if I'm swing trading, it all depends on what type of swing trade I'm doing. Longer term swing trade, shorter term swing trade, maybe just a scalp. In this case, we close, boom, big at 10, very big green volume bar, big green candle. You notice this at a lower volume follows the lower candle, so this is good consolidation without any anomalies. So I'm expecting this to continue. And you could even see it right here. If you followed the overall 30-minute 10 and 50 MA trend, look what happened. Right here, across, closes finally after this earnings gap above, and it holds above the 50 MA, so there's no reason for you to short here. Just keep holding and holding and holding and holding and holding and holding, and look what happened. After it closes below here, you already are aware that the weekly is long-term bullish, so don't try to go for a long time trying to short just because it closed below on this 30-minute. Remember, the weekly is more powerful. So the entry for the 30-minute is just looking for a bull cross signal because of what the weekly already told you. This is better for intraday. So now this happens, I'm expecting 165, and its majority of it is because of this. We have the 1 count, the 2, the 3, which is mostly the most longer wave extended. Got the 4th pullback where we were talking about that big weekly green candle at the 118 region. And look at the move right here. This is on the top of lines are bars here instead of candles. And so overall, I'm looking for this to have been the smaller degree wave 2 pullback. And I want to see this go to 165. So again, you see the waves here at 1, 2. I counted this myself as well. I had the picture with the count, but I erased it. So shout out to Option Flies. He's great. The 4th pullback right here. So I'm looking for this 5th to finish the big wave 1 count. And I want to see around 165 to 170. He has about 170 here, but I definitely like that 165 region. So let's see what happens overall. And of course, I'm looking more for 165, which is the minor 3 right here, but he has it overall at 170. Great count. It's been following exactly to what we're looking at over here. Hopefully this helps you. This is a bit more educational, and we got to look at this inverse head and shoulders essentially when it comes to the weekly, which is further confirmation when you use such a simple moving average like the 10 and 50 MA, which let me remind myself of the name. ETF HQ, they did a study right here on golden crosses, and it determines that the best ones were the 13 and the 48 MA, and also the 10 and 50. What they did was show overall which ones had the best percentage gains. You could see right here that the 10 to 5 ratio, which is 10 and 50 MA, had a 16.56 green return annually. Look at it right here. The 50 and the 10, 16.56, great. 13 and the 48, 16.88. So those MAs combined are amazing for returns. That's why I have the 10 and the 50, amazing for returns. And now let's just look at this inverse head and shoulder right here. You can see it clearly. Some people say, but this side is shorter than the other. Don't ever try to think the textbook is going to happen in real life. Real life is not textbook. You can clearly see an inverse head and shoulders here, followed by the fact that you have a confirmation of the bullish EMA cross to further confirm that this is going over this resistance of 145. And you see the volume bar candles are now further to the green side ever since here and ever since here, with the confirmation of the MAs. Confirm it with the MAs, cross into the side you're looking for, confirm it with the volume price, confirming the candles, and that helps you overall. Peace.